Hello students, in the current video I will explain most significant topics of financial management, that is scope of financial management, nature and objectives of financial management. This topic is very significant for the students of BCom, BBA, MCom, MBA, CA, CS and CMA students. So let's start the topic. Scope of financial management. When you talk about the scope of financial management makes three types of major decisions, that is financing decision, how to procure the funds needed for the organization. Next, investment decision, whatever funds we have generated or collected through various sources of finance, how to invest that money, where to invest money, when to invest money, that will be discussed by investment decision. Whereas the final one is dividend decision. Once we make the investment and earns the profit, and what is the methodology of distribution of that profit, how much profit should be paid as dividend, how much should be retained as reserves and surplus, decisions taken under dividend decision policy. So financial management covers these three major decisions. This is called as scope of financial management. So first one is under that scope, procurement of finance, that is financing decision, that is estimation of financial requirement. Here when you talk about the estimation of financial requirement, whenever we start a business or whenever we want to go for the expansion or whenever we start new project, we require huge capital investment. So the question arises, how to ascertain, how to calculate, how to estimate what is the amount required for this expansion, development or new projects. It may require purchase of fixed asset, that is plant and machinery, building, requirement of working capital, payment of salaries, wages and other operating expenses, all comes together. We have to ascertain how much amount is required for the organization to be collected, to be procured, to be sourced. So once you have done with this, the next topic, deciding the capital structure. When you want money, once you have decided the money, how much you require, then the question arises how to procure those funds. Whether we have our own funds, that is reserves and surplus we have, that we can utilize, our retained earnings can be utilized, changing the funds, or else we can borrow the funds. In the sense, we can raise the money through issue of debentures or any long-term loans. Then the third one is proportion of these two combination, our own funds or borrowed funds. So like this, we have to decide what should be our capital structure. Capital structure related video I have already made. I will share the link in the I button as well as in the description box. Please do watch that EBIT EPS analysis video. You will have a better clarity about the capital structure. Then the next one is choosing the source of finance. What is the source of finance from we get the money? So while choosing the source of finance, we have to what we call analyze lot of factors. We have to understand, we have to analyze, we have to interpret lot of factors which have high influence on the growth of the business. Reason why choosing of finance is very significant area. So what are the factors that we need to consider? That is a risk associated with the source of finance, cost of the finance, cost of capital, we can say here. Cost of capital video I have already made. I will share the link in the I button as well as in the description box. Please do watch that video for better understanding the concept of cost of capital. Then long term versus short term borrowings. How much should be long term, how much should be short term. Dilution of control and management. If you issue equity shares, then what will happen? The management and control, in the sense ownership, will be diluted. Flexibility in repayment, how to repay that amount, right? If you raise the money through debentures, how to repay. Source of finance, here we have equity, retained earnings, debt. We can raise money through equity shares, we can utilize our own money, that is retained earnings, we can raise money through debentures, and one more is there called as preferential equity, preferential even. So all these sources of finance we have, it is the duty of the financial manager to decide which source of finance is optimum and suitable to the organization. Based on that, he has to make the decisions. And selecting the pattern of investment. Once you raise the money, how you will invest the money. This is very important area, because if you don't make wise decision in investment, your business will collapse. You cannot earn profits. So that's the reason why evaluating the historical returns. When you're making the investment in the any area, you must see the historical return in that particular area of business. What were the historical returns that we need to analyze? What history talks about this particular investment? Prediction about the future returns. we need to calculate future returns now. Whenever comes under the capital budgeting decisions even. I have already made the capital budgeting chapter videos. All the topics I have covered, I will share the link in the I button as well as in the description box. Please do watch those videos even to better understand investment in business with regards to capital budget. So prediction about the future return, we have to evaluate what will be the return in the future, how much return we will get. Based on that, you have to make a decision. Right type of investment vehicle, then figuring out your timeline, how much timeline you wanted to use to earn the profit. Projected profitability, what is the profitability? See, cash flow is different, profitability is different, that we have to understand. Favorable asset utilization, we have to utilize the assets optimally to generate more profits. Intrinsic value rather than market value or conservative capital momentum and more. In the sense what? Intrinsic value is very important. Intrinsic value in the sense assets minus external liabilities is an intrinsic value that we need to calculate more instead of market value. We should rely on intrinsic value more. So these are the various concepts you must know while making the decision regarding the investment. Then proper cash management. Cash management is very important because if you don't have working capital, I have seen lot of businesses which did not perform well because of the improper working capital management. They lost it, they collapsed it, they finally became bankrupt due to improper management of working capital. So under that, cash management is a part of working capital management. So you must be very careful with regards to this. So cash management, collection of cash, payment of cash, planning of cash, handling of and use of cash. So these all are very significant. The objective of cash management is to regulate the cash balance and cash liquidity. If you have more liquidity, it is not good for the organization. If you have less liquidity, it will be very dangerous for the organization. You cannot make the payment. If you have more liquidity, you are underutilizing your assets. So these kind of concepts are very, very important. You must make always optimum balance. Investing in inventories, fixed assets, avoid the risk of insolvency. Right time to buy the raw material. When should we purchase the raw material? On season, off season. This all you should see. When to transform into a product, how to make the finished product, when it should be produced, when it should be launched in the market, when we should sell the product, when it pays their bills. So this all, how much to get back our cash when we sell the product. This all comes under the category of cash management. And implementing the financial control. This is also very, very important. Financial control is very significant to minimize the risk, right? We need to create policies and procedure that should be implemented in order to handle the cash optimally, properly. Financial controls are implemented with automation. Nowadays, automation is playing a very significant role. Wherever you go, automation is available. So automation is one of the technology item which will nowadays is playing a very important role, and that we can utilize and apply in our cash management also. Accountability and responsibility. We need to create accountability as well as responsibility among our employees. Then only we can utilize the cash and other assets optimally, and accountability and responsibility is very significant in the organization. Reconciliation. We need to do reconciliation in the sense periodically or in certain intervals, so that we can understand how the things are going. Approvals, disbursement policies. Whenever we are giving any payment or anything we are doing with regards to payments, we need to see approvals. Who is the approving authority? It should be a competent approval authority must be there. Disbursement of policies in the sense, whenever we are giving cash, what is the policy, what is the procedures we are, not only cash, every aspect, right? So implementing controls are very, very important one, right? These are the basic what we call areas which are scope of financial management. Now we will understand the nature of financial management. When you talk about the nature of financial management as discussed, it is an integral part of management. It is one elements of management theory only, right? Special branch of management because it deals with the financial management is prevalent everywhere. Financial management will be everywhere in day-to-day life also. You have to make a lot of decisions which are directly associated with finance and money. So financial everywhere in the entire organization, in Financial management is everyone's responsibility. See, controlling the finance and managing the finance and utilizing the money optimally, it is everyone's responsibility. Whoever working, they have to utilize the funds properly. They should feel like it is our own money, and then only you will manage funds properly. At a home also, we have to stand that everyone's responsibility, then only we can run the financial management is an approach. As we have already discussed, the financial management is related, relation in the financial management is highly related with many other subjects also, like economics, accounting, statistics, and marketing, and many other subjects. The video related to that I have already made. I will share the link in the description box. Management is a controlling function. Of course, it is a control. We will financial management as a controlling area to handle the and optimum use of the management is largely centralized. It is a centralized process. It will not be a decentralized